Hello friends, welcome to my channel Game of Trades. Today is 3rd of February 2018 and in this video I will be taking up another topic on trading psychology, and this is far most important because the way we think determines what we are looking in the chart. So we will go through a simple exercise. I am taking an example of Tata Chemical for example. But then this can be done with any other chart. First, see the disclaimer. Whatever information you are viewing through this YouTube channel is only for educational purpose, and any trade that you wish to take upon based on any suggestions made here is entirely your responsibility, and I can't be held legally responsible for your profit or loss. Now this chart, if you see, there has been quite a rally from here, so it has been, let me, so if you see, it has gone up quite, and now it has been a consolidation phase. Now there will be time when you look for certain, either either to go bearish or go bullish. So this is something that we will be looking for whenever we see any chart. But now we see that this is has taken a sidetrack, and now the things what we will be watching for is either it should break upwards or it break down from here. So we'll wait till we see a breakout happening here. Now let's say we are somewhere here, and we have been following this chart for long. We come to this point, and we see a breakout happens at this. So we saw a green candle here followed by a red candle. Now we see that since it has been above this breakout level, but then this is range bound, so if you see, this is the another line we have to look for to break out. Now we see, let me zoom it. Yeah, so we were here, we were looking for a breakout. It still has not been given, and now we see a clear cut breakout. Now most of the people, most of the traders, what they will do is they will see a big gap here, and this gap is being sustained for long time, so 4 days. But above that, this is a very strong candle. There is two spinning top. Now this gap for them becomes a run up gap, and this is not wrong at this level. So this is a runaway gap, this, and now we see two candles, and the fourth candle is again a strong candle, and this opens and closes above this range. So now it's the time to go bullish. Again a next candle which has a long shadow upward. If you see here, this is a candle which has closed almost at the bottom. This is a red candle, and it has its long shadow upwards. Now this gives a bearish implication, but then this has closed above this, so this was also okay. And let's say that you decided to go long at this level. Okay, let me take away this. Then a red candle. Now those who have not taken trade here, for them it becomes important that the close remains above this level, and there is a retest of the breakout level. Now this is not actually a retest, but then somebody might think retest means it has to still come down, but then it is sustaining over this level, and this is bullish, and there is nothing wrong in thinking that. So might be some people go long at this level also. So at this level we see that we have a gap, a good gap up here. Now a good green candle, and it has been continuing up and it is sustaining also. Next day, we have this green candle. And now this green candle takes our hope still higher. That okay, if let's say that you entered here previous day and you hold it, you carried your trade till next day, so now you are in profit and you say okay, it was a good trade you made and you want to book more profit. You don't want to book now, you want more profit. So what do? You carry your trade the next day. So next day you saw a red candle. Now this red candle probably had wiped all of your profits in this position of Tata Chemical. But then probably you say that okay, no, my buying price was less, so I will wait more and I will see what next date has to offer, because the close is still below, has not crossed down. There was fringy move in a fringy intraday move, but then it has managed to close above this line. So you wait for the next day. Again, this is also not a bad candle, and again you are in profit because it has closed above. So let's say that you bought here again. So if you had bought here, you are in profit. Again, you remain in profit for 3-4 days. Let's see what happens next day. Next day, there is a big red candle. And now what is significant is this red candle has closed below this 20 SMA and 20 EMA. And all your profit are definitely wiped out and you will be in a big loss. Now, this is important now that how do you think now? Probably you will think that this is now again if you are bullish, you are bullish. Why? Because you bought here or here and you have carried your trade for the want of some bigger profits. But now you see that you a big red candle has come and your profits are wiped out. Leave profits, you are in a big loss now. And you see now how do you think is more important? Do you exit or do you keep your profits, or do you keep your position on in the hope that it will still go up? Now if you are in the hopeful mode, then what will you think? That this was the gap, and probably since this was the gap which needed to be filled, that's why this red candle has come. Why I'm telling you this is because how do we explain to our mind that why we should remain in a position, and that is what most of the traders do, and that is the big mistake, that we keep explaining ourselves, we keep giving hopes to ourselves that no, अच्छे दिन आएंगे, and and because of that we keep losing money. If we keep our losing position on and we keep it carrying on next day in the hope, hope is a good thing. We always say that hope is a good thing. We should be hopeful of a bright future, but we should also be sensible enough to think what is coming. Being hopeful after seeing that things are not working is simply being foolish. So this is something very important, guys, that whenever we are reading a chart, instead of explaining to ourselves why we should remain in the chart, and we should just interpret how the chart is looking, what chart says currently. If you were not holding that position, then what stance you will take at that point of time? This is a critical question. Now you have a bias only because you are holding certain position. If you were not holding a certain position, then what stance you will take now? If you were to trade this script now, what you would be doing? This becomes very important. If we can invert our thinking in this way, then only we can become a sensible trader, then only we can become a profitable trader. Let's not give ourselves hope, because this hope will make you fool, will keep fooling you, and you will keep losing money. Now at this level you think that this is the gap filling, and now the next day it should go up. Let's see what happens. Again there was a fringy move, there was a fringy move. And if you see, this is a huge run up, so it has a big shadow, and the candle is green, but it has closed, but still this move, let's say that next day when market had opened at this level and it keeps going down and down, and still you haven't booked your loss, then what happens? Then what would be your rationale? That this is now the limit, this is the lower limit. Now whatever happens, and this has been this has been respected several times. It was respected here, it was respected here, it was respected here for few days, it is respected here. This time it could not even touch it, but now here also it is not able to touch it, and probably this support is going to be hold. And now we see a big uh, shadow downwards and a green candle. So our hopes becomes, double. That I was thinking, right, let's not book the loss now. Now this green candle will boost your thinking that it is going to go up. Let's see what happens next today. Again a fringy move, a crazy move throughout the day, this kind of move. If you are doing an intraday trading, then it becomes very important. If you see big candles happening, then you have to book your profit. Keep booking your profit, otherwise you never know that at which direction it is going to go, because this opened here at the top, this candle. So if you have carried a position and there was a gap up at this level, then you are very happy. I was right, I was right, and this is what you will be telling yourself. And then it starts to move down, 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 and this whole run up happened, and you closed here. Now you opened here, you closed here. You had a chance yesterday to go out, you had a chance a day before to go out, you had a chance before to go out, but now see this whole down move, you kept your position on, and now you will be definitely in a big loss. Now for Tata Chemical, the size is 1500, and you see this kind of move. Let's say even if it is to, so this level was 763, so let's take it 760, and this is 730. So 30 points of move, 30 into 1500, so 45,000 loss you have made in just few days. Let's see what happens. And still you think that now this is 50-day EMA, and this is again a shadow here. Let's say that it should go up tomorrow, and the next day what happens? A red candle again, and which closes below the last close. Next day we think that okay, now this 50 EMA looks like the support is active now, it can be taken, this 50-day EMA. And we see this green candle which has closed above this 50 EMA, and we think okay, bang on, I was right, from now onwards it will start to go up. The very next day it opened higher, so it was a gap up. This red candle made a gap up, but then after the start, that was the top of the day, and from that point it kept on losing, and it came down, but it managed to close our 50-day EMA. So bang on, you will say I was right. This 50-day EMA, this is a good support, and this holds. Very next day, it closes below 50-day EMA, and if you see this, this is the trend line that you have drawn. And now you see that this line and this line are going to converge very soon, and possibly a break out above this trend line will help you, it will help in this losing position, and now you should see some good profits happening, or at least the minimizing of or decreasing of the losses can happen, because now this is going to converge, and now it has nowhere to go, it has to go up only, because this line is going to end now, this conversion point. The very next day, instead of going above this, it has chosen to go down, and now you start to jitter that you might have made some mistake of thinking that it will go up, because now even this 50-day EMA looks like this is not working. Till this level you were thinking now this will hold, this will hold, but now looks like this is not working, and probably this will work. This is going to be a big support, because this has always been respected. Let's see what happens next day. So next day we have indecisive candle, so this is not significant in its own way, and you decide that you hold on. Next day it goes still down, a green candle, so probably this support might hold. Now this red candle has a long shadow and has managed to open above and close above this green candle, so possibly this looks like this will start to go up now. The very next day, that is yesterday, we have this red candle, and now we see that this support was also broken. And now this is 100-day EMA, so this green line is 100-day EMA, and this also looks to be broken. Now what would be the rationale of still holding it? We'll try to think about it, because still if you are in a hopeful mode, then what you will think that what is going to happen at some point of time it will bounce backward, but we don't know when. This is a game of probability, and we have to think in there are a lot of things attached to it. So currently I have shown you just with the candlesticks that how candlestick look, and how do you decide based on that, how do you decide this resistance and support. So there can be numerous ways. One is these horizontal lines, trend lines, then we have moving averages, we have simple averages, we have Bollinger Band. Now this has broken Bollinger Band also downwards. Now this has broken 100-day EMA also. And now if you are still holding it, what does it mean? Now this RSI has gone below 40. Now this is very important, guys, that how do we think reflects in our trade, and that's very important, because one of the key principle of trading, if you don't know risk management, don't trade definitely, and I will take this topic in a later video. But then in this video I just want to concentrate that how you make big losses, what makes you cling or stick to a position that you are not able to exit, because you are finding reasons why you should hold on to that trade. Now all I'm saying is just revert it. Currently if you are bullish on this, you are just trying to find reasons of why you should go long. Let's think in some different way and think about what other guy would be thinking. Because if you are long at this level, somebody would be short. If you are buying at this level, some would be shorting it. Let's see how this trading actually happens. There is a buyer and then there is a seller. If you are a buyer, you will be looking for some seller. Now you are buying because you think that price is going to go up. What would be the rationale that a seller would be having? For him, what he could be doing is, because let's say that he had already bought at some lower levels, let's say here, and now at this level he is in a good profit. So he will try to sell it because he want to book his profit. Nothing wrong in that, he does it. Or somebody has bought at this level and he was smart enough to realize that he did a mistake and he exited here, the place where you bought. So he bought here and he exited here, so he booked a loss. Now there could be some person who has no position in that and he is looking to trade on this, and he says, okay, now this candles, the green candles, we have a above shadow, and this does not look like the breakout will sustain, and he goes bearish on that. So he will give his own rationale, his own chart trading, his own analysis in this chart. The very chart you think is bullish, he will be thinking bearish. So you don't know who you are you don't know who you are trading with, but the mentalities are very clear. Currently, if you are not holding position and you want to buy it, then you are looking for a seller. For a seller, there can be three possibilities. There can only be two possibilities. First is, he might be having a position in the same script, that is Tata Chemical, or he might not have. So either he has a position or he hasn't any position. If he has position, then there are only two possibilities. So if he has a position and he want to exit, then there can be only just two possibilities, or let's say three possibilities. Either he want to exit in profit, either he want to book his profit, or he want to exit in loss, or he want to exit in break even. Yeah, so only these three possibilities can happen. He want to book his profit, he want to book his loss, or he want to break even. Now if he has no position and he is selling, that means that he is thinking that the price is going to go down. Even if he has a position, he is exiting because he thinks that the price might not go above this, or maybe he is just doing some intraday play and he is thinking, no, I have enough profit, now I should book it. Either way it is right. The main thing is, he is thinking he might be booking loss because he thinks that now I have taken a wrong entry and I should exit. If he is booking profit, then also he thinks that the price is going to go down and I should exit. And you are the one who is thinking that the price is going to go up and you want to buy it. So this is very important to understand, that we don't know who we are trading with, but we should be sure of what the other guy is thinking. He is thinking price will go down, that's why he is selling, and we are thinking to go long because we think that the prices are going to go up. Now there is a clear distinction in the way we are thinking, and what we always think that our thinking aligns with the major money masters. That is, the way we are thinking is the way majority of money will flow. That means if we are buying, then the majority of the people, or let's say the big players, because Majority of the people are wrong in this. That's why the psychology comes into the picture. Only big players come make money, and most of the retailers lose. So wherever the money flows, either upside or downside, either money flows in or it flows out. So we always think that we are in the right direction, and that's why we take a trade. Nobody trades to make losses. We take a position just to make profit. So we are thinking it will go up, and we think that the majority or the right players are with us, and it will go up. This is what we are sure. This is what we think, and that's why we take a trade in that direction. We never think from the perspective of the other person to with whom we are trading. Now this remains a very important point, that shouldn't we invert our thinking and think the rationale of the other person of why he is shorting it. And since we have been making losses majority of the time, and this is true for most of the retail traders, so shouldn't we think the other way around? The way we are thinking we are making losses, shouldn't we think the other way? If you are making consistent losses, then just invert the thinking or just invert the trade, you will suddenly start making profit. But then nobody thinks in one way and trades the other way. So let's start in this way. We first start with inverting our thinking, and then only we can reverse our trade. So at this point, you were thinking to go long. Now let's say what other guy would be doing. Probably you should look here for confirmation. Price is staying here for a long time, and I have told you several times that longer it takes, weaker it gets. So if a breakout has to happen, it will happen. And if it is taking a lot of time, because if you see this range is not big enough. So this is from October 31st 2017, and this is hardly 4 months. Now this small range, if breakout is happening and this is taking longer, I'm not saying that this is always right, I'm not telling you that way, but then this is uh, this is very important, that the other guy is thinking other way and he is selling it and you are buying it, and it is taking longer. So there are other things that we must be looking. Now at this point you are still holding because you were thinking that this was gap filling and price will go up from now, but the other guy would be thinking that this has broken below 20-day SMA and 20-day EMA, and probably this will go down. The next day also, though this is a big shadow, if you see there is a big shadow and this is a green candle, but then this was not strong enough to close below this 20-day EMA, and we have this resistance line also, right? So previously we broke out of this level, but then it was not able to close above that. So this tells that we have a weakness here. Next day, though we opened gap up, but the gap up was the top of the day, and we see that it has closed below, even leave 20-day EMA, it has closed below 50-day EMA, and the very next day it did not muster enough strength to close above that. Now this was able to close, but then the very next day still 20-day EMA has now become a resistance. Now what you were looking for support here, now guy who is bearish will look for resistance. So this is very important, guys, that even though you are bullish on a script, think how other person would be thinking. You are looking for support और तुम्हारे support टूटते जा रहे हैं. No, you looked for this support, 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 this trend line support, and you looked for this 100 EMA support. सारे support टूट गए, all the supports are broken now. Still you are thinking that it will go up and you are holding, but the other guy, he is just enjoying because he is seeing the resistance. Okay, it still, it did not have the power enough to go above this. It is facing resistance at 20-day EMA. Now this 50-day EMA has also become a resistance, and again we see it is the resistance, and now we see a crossover happening. We see that it has broken this major support which it has been having for last 4 months, and this has broken the lower band of Bollinger Band. So the way you are thinking and the way the other guy you are trading with are thinking are totally different. Now who is right? The only thing that you can do to adjust your trade analysis and chart analysis is just to think the other way around also. Let's not be biased with just one way of thinking. It's important if we are going for long term, and there is a bit distinction of time frame also. If you are going for long term holding, or if you are trading for few days, or if you are trading for intraday, then it makes a lot of difference in how do you think. And then there are certain things that can be bypassed in this chart analysis. What I am telling you, I am talking mostly from the trading perspective and not portfolio perspective. So for portfolio, one has to look the other way. For all I'm saying is for trading, and when I say trading, I mean this will apply to intraday if it were an intraday chart, and this will apply to swing trading. So if you keep your trades open for around a few days to let's say few weeks, then this holds. So this is very important to point out timeline here, because otherwise you might think, and why I'm saying this is because if I say one thing here, you apply to everything, and that might not be applicable, then you will be in trouble. So just keep in this mind that this is just for the trading perspective and not for the portfolio perspective. For long term, we see this thing also, but then there are differences attached to it, and which I might cover later in some other videos. So what I'm saying is that let's not be being biased in one position is okay, but to what level is important. Unless you be biased in a position, you will not take a trade. Unless you think in a particular way, you won't. Unless you think that this script is bullish, you will not take long position. Unless you think that this is going bearish, you will not take short position. So at some point of time, we have to decide what to do. You cannot always say that uh, uh, that it has both the science, and then you will be never able to trade. So let's not fall into what is called analysis paralysis, too much of analysis. But then this is what through this video, I just want to highlight that there is a distinction of thinking, and that's why one is making money, other is not. So while we are trading, it makes total sense that we invert the thinking, we switch thinking, and try to see uh, how, if you were a sailor, then what would be your rationale of entering that trade. Now at this level also, one can find very good reason of holding that losing position, that this is a, if you see this candle and if you this candle, this becomes a two-edged bottom. This is a perfect two-edged bottom example, and this has the exact same closing. So now, no, this becomes really difficult, and it is very important to adjust our thinking according to the current chart trading. We should not be biased while reading the chart. Maybe after we have gathered some analysis, after we have done this chart reading, when it is the time to reach to the conclusion, then after reading the facts, our writing the facts, we'll do a pros and con, and then we should be reaching to a point of whether to go long or short, or whether to do nothing and escape, because it's not always in a chart reading you get a signal to go long or short. It's totally okay that you come up with you end up in a conclusion that currently I don't have any signal and I won't trade now, and that is perfectly okay unless you have a strong reason to go either long or short. Don't trade that. So all I want to say here is that you should be able to reverse your thinking. You should be able to think the other way around also, and that forms a very important part of chart reading. Nowadays chart reading has become subjective, so you interpret in one particular way, and in this I have just used trend lines and all. I could introduce Fibonacci levels. I could introduce a lot of other things to help you understand in a better way, but then that would become complicated. So I could introduce you here Elliott waves. I could introduce you Fibonacci labels, but then there are a lot of things that will come in the chart. All I want to say you in this through this video is that our thinking determines the way we trade, and if we can think in a right way, in the right direction, and not in the biased direction, because normally what happens is you, before reading a chart, you become biased, and then you look for the signals or the signs that helps you, that boosts your bias. So that is something that we should be avoiding. If you are bullish, then it does not mean that you keep on searching supports after in a losing position, and if you are bearish, it does not mean that you keep searching the other thing. So if one support is broken and you have entered a trade and it is losing, then it is the time to invert the thinking and think how your counterpart traders are thinking. The guy you are trading with is thinking in opposite way, and try to find that rationale. That would help you minimize loss, because if you keep holding to a losing position, and this is what happens, the profit that you make in 10 trades might go in just one wrong trade, and only because you have not risen above your thinking. You keep clinging to your original thought, and you are stubborn enough not to invert your thinking. And stubbornness, obstinacy is not is if you are that much stubborn, then you should not trade. A trader has to be a flexible person, because if you keep holding to your losing position, I just showed you what does it mean, and why I took this example of Tata Chemicals, because I was also bullish on that, but then I booked my loss the day I made around 3 lakhs intraday profit. So the video I posted already. This was the only position which was in loss, and normally I don't hold on to a losing position that much, because this is what I have learned in my years of practice in trading, because that's the sole reason why we end up losing month after month, years after year. So that solo thing, if you change, you will see a lot of things happening and all. Once a support is broken, reanalyze the chart again, not in terms of what you were thinking originally, but the way the other guy would be thinking. And if you are able to do this, if you become good at this thinking inversion principle, then probably you will become a profitable trader. Most of the retail traders are not. So it's the time that you think right. It's the time that you do things right. And guys, if you can just get this one point, I bet that you will become a better trader. So that's it. If you have any further queries, you can write in the comment section, and trade carefully. don't be don't be stubborn. This is very important. And other thing is, I had given this call in my WhatsApp group also, and I booked loss, and they at least there's one guy he did not, and he kept explaining me this, that this is again support, and he kept losing. I'm not sure whether he is out of this position. I told that I am out. I'm not sure if he is out still. So this is what I wanted to explain. And this trading psychology is very important. Watch this playlist. I will be keep posting and updating this playlist again and again with new videos, because this single topic of trading psychology has a lot of branches inside it, and this remains a very important part. All trade analysis, everything is just one thing, but then unless you are able to tweak your mind, your trading account will not go up. So that's it. I hope that you liked it, and this will improve your trading style. So thanks for watching. Bye for now.